Good morning to all of you, and welcome to our financial year 20 year-end presentation. I am Trond Williksen, the CEO of Benchmark Holdings, and I am joined by our CFO, Septima Maguire. And together we are going to give you an insight into the financial performance of our financial year ending September 30th, as well as update you on status, strategy and outlook for the group going forward. We can start off with the highlights. Truly, financial year 20 has been an exceptional year for Benchmark, a year of true transformation. The main theme has been to deliver on a highly needed restructuring, and we have done so. We have completed a very significant restructuring, transforming the company towards becoming a streamlined, focused aquaculture biotechnology company with core activities within genetics, advanced nutrition and health. We have managed to execute on this despite partly difficult trading conditions and despite considerable challenges related to COVID. And we have emerged in a significantly stronger financial position. It follows from this that given the circumstances, we are satisfied with the financial performance in what has been a truly exceptional financial year 20. The financials, which you can see from these slides, reflect that we have been able to trade through a challenging year, being rather resilient. Key to the financial performance of the group has been a strong operational and financial performance in genetics, who have been able to advance operationally and financially despite COVID, supported by a salmon industry that remains rather robust throughout the year. The situation in advanced nutrition has been more challenging. The shrimp industry, which constitutes the main market for our high-quality advanced nutrition solutions, has been significantly impacted by COVID and by underlying temporary disruption of supply-demand balance in different markets. In addition, we have experienced similar imbalance in supply-demand of Artemia, still being our largest product group in advanced nutrition. Both these factors have impacted our operational and financial performance for this business area in the financial year that we have left behind. Our health business area has had a year of considerable change. With the divestment of large parts of its prior business activities, which we have defined to be non-core. What we are left with is a very focused business area, now concentrating only on aquaculture and more specifically on solutions addressing the main sustainability challenge of the salmon industry, the sea lice. Through the year, we have managed to make very good progress towards a commercial launch of BMK 08 and CleanTreat, which will be a transformative solution for the salmon industry and is still on track to be launched in Q2 in calendar year 21. Looking forward, I see outlook as positive. We have a company well positioned in a very attractive industry with a lot of opportunities. And both the industry and the company are aligned with major ESG trends and opportunities. Our aim is to be a streamlined, profitable, market-leading aquaculture biotechnology company. Financial year 20 has really brought us forward towards this aim. We are ending financial year 20 in a much better position than we were when we entered the year. Financially stronger, more streamlined, more focused, more commercial. With three clearly defined core business areas, genetics, advanced nutrition and health. Three complementary areas, all of them with very good value proposition to the challenges and opportunities of the aquaculture industry. All of them with established business, as well as initiatives that will enable us to grow in the years to come. We will remain focused, sticking to what is defined as being the core of Benchmark, making sure we realize the substantial potentials we have in our hands, and as soon as possible, becoming a sustainably profitable, generating company. Before I add more flavor to this, I will leave it up to our CFO, Septima Maguire, to take you through the details of our performance and financials for the year that now is behind us. So, Septima, over to you.
Thank you, Trond. As Trond has noted, 2020 has been a significant year of transformation for Benchmark, where even amidst the difficult global environment in terms of the structural efficiency programs, we've been able to deliver what we promised and then more. When we look at the adjusted EBITDA of 14.5 million for the continuing business, it becomes much clearer that even in such a challenging year, we have really good foundations to build this business into being a profitable and cash generative business in the future. While we see challenges in our markets, our business areas have adapted well to working within the current crisis, and we continue to make progress on each of our strategic areas. Focusing on 2020, we ended the year with cash of 71.6 million and available liquidity of 83.2 million, driven in the main by the fundraising and the proceeds from the divestments. Throughout the year, our focus was twofold. Firstly, to ensure that the business continued to retain clarity of purpose, and equally important, to ensure that we address the cost and cash burn areas in the business, to be able to invest in our commercial opportunities as we now move forwards. This resulted in the decision to divest most of our activities in vaccines where the costs exceeded the future benefits. So moving on to slide 6, where we take a look at the overall performance of the group. Sales for the continuing businesses were impacted by the underperformance in nutrition, partially offset by stronger sales in genetics. And this is very much reflective of the resilience of the end markets, with salmon being significantly less impacted by COVID-19 than shrimp. Our gross margin was further impacted by a reduction in Artemia pricing and the lack of critical mass from a sales perspective in nutrition in the year. Discretionary spend in operating costs and R&D were paused to mitigate the impact of COVID-19. We were not wholly successful, but these actions have contributed to building resilience in our continued business by reducing costs year on year by 4.4 million, and also strengthening our balance sheet as we move forward into FY21. Genetics have had an excellent year, showing progress on all fronts, with growth at a revenue level of 5% at an actual exchange rate, but 14% at a constant exchange rate. This was definitely the business area which was most impacted by fluctuating exchange rates during the year, as the Icelandic krona and the Norwegian krona were quite volatile. In our salmon egg business, which is 2/3 of our revenue in genetics, we were able to utilise our facilities to their best advantage, with our biosecure facility in Iceland operating at high capacity, allowing us to fill a gap in the supply of salmon eggs into the Scottish market, as Norway had lost its ISA-free status restricting exports. This resulted in us supplying over 50 million eggs into the Scottish market in the year, in comparison to 24 million which had been delivered in 2019. Our new Norwegian facility at Salten had its first full year of sales and successfully passed its break-even point. As we move forwards, our focus is on building on this progress to ensure that it is consistently earnings accretive in the coming years. Salten's ability to produce eggs year-round allows us to have continuous sales throughout the year within this business area. Now, in FY20, we had a non-cash fair value uplift from biological assets within the income statement of 3.3 million. This is versus 2.7 million in 2019. This fair value uplift is driven by accounting standards and represents expected future profit from future sales of salmon eggs, which we recognise in the current period's income statement. As we move forward, we want to focus more closely on adjusted EBITDA, excluding this fair value uplift as a metric, to allow our investors a much clearer picture as to the profits on what we have sold in the period and more clearly help mirror the cash around those sales. So excluding the fair value uplift, adjusted EBITDA in genetics would be 11.1 million in 2020, up from 7.4 million in 2019. And the adjusted EBITDA margin, 27%, up from 19% in 2019, is still an excellent performance. When we consider our future growth opportunities in genetics, in FY20, given the struggling shrimp market, we deferred the planned commercial launch of our SPR shrimp and instead used the time to focus on market trials. Now, as this project is in its development phase, the majority of the costs associated with it are currently being capitalised, with only 0.4 million in adjusted EBITDA and 1.6 million capitalised in FY20. It's important to understand that from the point of launch onwards, all costs associated with this facility will be expensed. We continue to build our facility in Chile and invested 1.5 million of OPEX and 1.2 million of CAPEX in 2020. We expect to start selling eggs out of this facility from early in Q3 of the financial year 21. Chile has been more affected by COVID than Europe, as it's more closely linked to US demand. But we're confident in the quality of our genetics, and the ramp-up of the facility, as is normal, will have 3 years. It's also important to note that the eggs bought by the customers in Q3 2021 will typically be harvested in the end of 2023, so hopefully COVID is over by then. Whilst genetics were not impacted to a significant degree around COVID in the year, as we look forward, we'll continue to monitor the Norwegian salmon industry, as at present it is showing some short-term weakness due to the second round of lockdowns, but the impact is not significant at this point. Advanced nutrition. So nutrition shrimp markets account for 71% of its sales, and these were the most heavily impacted by reduced demand in the year. This was further compounded by a demand-supply imbalance in Artemia after a couple of years of record harvests. As we entered the year, oversupply within the Artemia markets and high inventory levels at the distributors resulted in depressed demand. And this was further exacerbated by COVID as shrimp hatcheries, which represent our main customer segment, chose either not to stock their tanks or to do so at a lesser rate. To counter the price competition in certain markets for Artemia, a strategic decision to reduce price in certain markets was taken. The impact of this can be seen at the gross margin level, which reduced from 52% to 46% year on year. During the period, a number of shrimp markets were either constrained by border restrictions or lockdown, and the nutrition organisations focused their efforts on enhancing their online presence, establishing online training and educational seminars. The sea bass and sea bream market, which is primarily centred around Europe, remained relatively more resilient, with a higher level of stocking occurring. But we did still experience a smaller drop in demand within this market of 8%. All in all, this resulted in adjusted EBITDA falling by 9.6 million, 60% to 6.4 million in the year. Health was an area of focused restructuring during the year, with the vaccines development and the toll manufacturing being reviewed and either discontinued or divested. This resulted in the continuing business having two main focal points: the sale of Salmasan, our existing sea lice treatment, and the launch of the new sea lice treatment, BMK08, in conjunction with Clean Treat. Salmasan delivered £1.2 million of gross margin contribution as sales fell after a year of high sea lice levels in 2019 in Canada, and also increased generic competition in Chile. The OPEX and R&D activities relate in the main to the regulatory team, who have been working diligently in the year to progress the marketing authorisation for BMK08, and our Clean Treat team, who have been working to be launch ready for when we have that MA in place. And in addition to these teams, we've also the infrastructure departments, such as supply chain, finance, people, etc. As part of the cost review of our continued business, we crystallised annual cost savings of 1.5 million through restructuring our senior management. This, in addition to the pause on discretionary spend, which we undertook when COVID started, resulted in a reduction of operating costs in the year. The pause on discretionary spend was well supported by all business areas, as can be seen here, with operating expenses down by 4.4 million and R&D down by 2.2 million in our continuing business. As we move forward, it's important to consider that these savings were a result of a hard stop on discretionary spend in areas such as travel, marketing, etc. And whilst we remain extremely prudent in terms of releasing these holds, we anticipate that as we gradually move into normal trading conditions, we will also gradually release the hard stop on certain areas, whilst maintaining a high degree of control over costs. The R&D spend that we're seeing within the continued business is focused on commercial aims, such as expanding the number of traits and genetics to broaden the customer offering, obtaining a marketing authorization for BMK08, and in advanced nutrition, expanding our offering of high-margin specialist products to customers to strengthen our market-leading place in hatchery and advance our market share in nursery and grow-out. Moving to slide number 11, to focus on what is the most important slide of the deck, cash and debt. Net debt in the year has improved considerably, from 87.1 million to 37.6 million. And the net debt position at the 30th of the 9th also includes the impact of 9.6 million related to IFRS 16, where leases formerly shown as operating leases are no longer treated as finance leases. The two drivers of this significant shift were the equity raise in February of this year, which raised net proceeds of 41.7 million, and the proceeds received to date for the divestments of 38.5 million. Some additional contingent consideration exists relating to these divestments, which may be received in the next few years. Cash used in operations was a negative of 7.2 million, offset in part by positive working capital movements driven by the lower activity levels in the year. We would expect a reversal of these figures once the market moves back towards positive growth. Interest paid in the year was 7 million, with cash tax at a much lower level than normal run rate due to the lower profits in advanced nutrition. Capital expenditure was also at a lower than normal run rate as we tightened cash control and focused on our strategic projects, BMK08, Clean Treat, ramp up of Chile, our SBR shrimp, and our replacement Artemia product. At the 23rd of November 2020, we currently have cash of £65 million and availability of £76 million within the group. Cash preservation remains a key driver in the business, but we're also considerate to the fact that we need to selectively invest in our business to progress it towards standing commercially on its own 2 feet. Back to you, Trond.
Thank you, Septima. As I ended my first part of this presentation, I think it's important to understand that Benchmark is in a unique position, a position to deliver and contribute to one of the main ESG opportunities over time, sustainable food production. We are in a very attractive market. Aquaculture is an inherently sustainable industry with a lower environmental impact than other animal protein productions, and it's growing faster than any other animal production. The industry is still very young, even having embedded main features to be sustainable. The industry needs products and solutions to improve productivity and support sustainable growth. And this is where Benchmark comes in, well positioned with a complementary offering, market-leading positions, a focused strategy, and an experienced and I would say highly skilled team to support and contribute to the further development of this industry. Now, when we have completed an extensive restructuring, we are also in a position to support and selectively invest in our core business areas, making sure that we as a company utilize the opportunity, delivering growth and sustainably profitability, making Benchmark an attractive investment. Close to a year ago, we issued a roadmap to growth and profitability. This is still the roadmap we follow. We have made significant advancements in the year that we have left behind. But significant steps are also ahead of us in the financial year we just entered into. Restructuring is complete, but we still work on further streamlining of the group as one group, building an agile, strong, commercially oriented company. There are potentials to be taken out, there will always be, and we make sure that we turn all stones necessary to make the group as the efficient group that we aim to be. We are lucky to have a pipeline of products that we need to deliver on that will generate further growth and development. The top strategic priority of the group is BMK 08 CleanTreat to make sure we are bringing the potential of this to life. We intend to grow in our established markets and have significant possibilities to follow up on. We have large opportunities for organic growth and expansion in our genetics business area through further ramp up of the Salten facility, primarily targeting growth in the large Norwegian salmon market, where we have strengthened our position over the last year. Further expansion of our capability on Iceland is also in the pipeline, enabling us to take a larger share in the European salmon production market, as well as position towards the upcoming land-based salmon industry. In this new segment, we have a unique market position due to the quality of our genetics, inherently optimized for land-based production environments. Similarly, we have large opportunities to grow in our established markets, building on our strong position also within advanced nutrition. Our strategy here will be to keep focused and keep seeking improvements in solutions and the way we work, enabling growth in specialist high margin segments. Further, we intend to selectively invest in areas to leverage group capabilities. Financial year 21 will be the year where we commercially launch SPR shrimp, underpinned by investment to gradually increase commercial capabilities as we develop markets in the year to come. Financial year 21 will also be the year where we expand our capabilities within salmon genetics, entering into commercial launch in Chile. This will enable us to expand into the second largest production region of salmon, where we previously have not had any commercial footprint for our salmon genetics. Finally, we will seek to look beyond what we have in our pipeline today to seek to position Benchmark for even further future growth. I've been clear on this before, that we will be disciplined in how to enter into this. We already have in our hands a lot of initiatives that we can grow and develop, and we will make sure that we take out the potential in these initiatives first. This will be first base. Beyond this, there will be new opportunities for the group that will enable further growth. We will seek this as we move forward, but be disciplined, looking for opportunities in areas that naturally falls within what is and will be our core business areas. We will not be tempted to go beyond and wide, again losing our focus. To give a little bit more granularity on the main initiatives that will be key strategic priorities for the group in financial year 21. BMK 08 CleanTreat is our highest strategic priority. Our aim remains to launch commercially in Q2 calendar year 21, and we remain on track to do so. Next milestones are the MRL ratification in the EU and getting the marketing authorization in Norway. In the subsequent entering of the market, we will apply discipline. Focus for now is Norway, the largest salmon production region of the world. We will start out with 2 CleanTreat systems and we will ramp up the investments with further systems, but doing so in line with the market uptake of the solution. SPR Shrimp represents another strategic priority for us in financial year 21. After years of developing world-class genetic strains with traits that will represent a real value proposition to the shrimp industry, we are now entering into the commercial launch phase. Tests in the market were done last year, confirming the potential. Demand is there, and we will gradually increase our capabilities to serve the market, starting off with increasing our capacity to supply 100,000 breeders from our US facility at Fellsmere. Our strategic priority in financial year 21 for advanced nutrition is to regain Artemia market share, grow our position in hatchery and nursery, as well as further develop our position as leading in health and environmental products. Everything within specialist high margin segments, where we have a very strong position to build on. Coming out of a year where COVID and market turmoil has reduced our performance, our focus will be to gain back and further develop our positions, and we believe that we are in a place where we are able to do so. Finally, the strategic priority for the salmon genetics in financial year 21 will be to continue to develop the increasingly strong position we have in these markets. The continued ramp-up of the Salten facility is a key focus, enabling us to take out the potential in this investment. The financial impact of this will show as the cost structure is rather fixed, meaning that increased utilization is a key to profitability. The product from Salten is superior, we know that, and it's very well received in the market. So we have a market update that will enable us to climb the ladder in the utilization of the facility in financial year 21. Similarly, we are increasing our key peak capacities in Iceland to meet further demand in the rest of Europe and to meet future demand in the land-based salmon segment that we expect will grow in the years to come. Where we are now in Iceland, we are about to reach our capacity and we'll make sure that we expand this, enabling us to deliver high quality genetics as demand increases. Finally, a few words on outlooks. It follows from what I've said and what Septima says that our focus is very much remaining to reach sustainable profitability and positive cash generation. We have a positive start of financial year 21, and we have a very strong focus on delivering operationally and financially to the best of our ability in the year that we just entered into. Having said that, market conditions is still the same as it has been in the latter part of financial year 20. We expect that the salmon genetics part of our business will continue to be quite resilient to the short-term volatility in the salmon market that we are currently experiencing. The outlook for the salmon industry is quite strong looking into financial year 21 and beyond, and we expect this to continue to be reflected in the demand we see for our genetics in this industry. The shrimp market continues to be impacted by COVID, and visibility on when this will change is still low. Consequently, we are prepared and we expect that this will continue to impact our advanced nutrition business for some time. Focus will be to deliver to the best of our ability, seeking improvements in solutions and also in the way we work, positioning to take our fair share of the market as it is now, and then gain position when the market conditions turn back to more normality. And markets will eventually return back to normal over time. As this reflects, the performance in our established businesses will be driven by the underlying market conditions. What comes in as a new vector is the planned launch of BMK08 CleanTreat that we expect to have positive impact on our performance, but then late in financial year 21. Focus in financial year 21 will be making sure we continue to realize the potentials of our initiatives, our strategic priorities and focused investments. And in doing so, we will always be mindful and committed to maintain a solid balance sheet, making sure investments in initiatives always is paced to cash generation. And on a final note, again, we are in a unique position as a company. We are in an industry with positive fundamentals, coupled with the leading position of benchmark. This will drive attractive growth. And in my mind, we are only at a starting point, a good starting point for a good journey.